Markets surged this morning as Russia backs off Ukraine. That is on Tuesday's edition of 3 Minutes on Markets and Money. This morning, futures are pointing sharply higher. The NASDAQ's currently up about 300 points out of the gate this morning. Now, that sounds like a big jump for the markets. And look, it is. It's going to be about a 1.5–2% gain this morning for the markets if we continue this process through the day. As we talked about yesterday, it's very likely that Russia was always going to back off their stance with Ukraine because of the fact that they really don't want to enter into a geopolitical war. What they want is a concession of some sort. This is what the process will work through. But again, Russia backing off here a bit, that's giving some relief to markets, and we're going to see a big jump. I'm going to focus on the NASDAQ this morning more than the S&P because NASDAQ is currently down about 14% from its record close that we saw previously. So again, even though we're going to have a very sharp rally this morning, it really doesn't change the overall dynamic of the downward trend in the market. We had this rally from the January lows that we discussed, this reflexive rally that took us back to the 20-day moving average. That has really been good resistance for the NASDAQ here over the last couple of weeks. So this rally today is going to run right back up into that resistance line as well. So again, while we're going to have a fairly strong rally out of the gate this morning, a lot of this is really just coming from very oversold conditions in some of these stocks that you're going to see rally today. In fact, we've seen some of the disruptor stocks like Asana and others have big rallies over the last couple of days. Money flows have been coming into the markets. We've seen some buying coming in underneath the surface. That's giving the market some support here at these recent lows. But the easing of tensions in Russia are certainly giving a lift to stocks this morning. Just that kind of relief rally is all this is. The markets were looking already to retest those lows. In fact, if you really kind of draw a line back here to January, the NASDAQ just did actually retest those January lows successfully with this bounce. The question will be now is, can we get above this 20-day moving average line? If we can do that, that certainly sets the market up for a retest of the 50-day moving average as well. Even with that decent rally here that you'll get, that doesn't really change the overall downward trend of the markets right now. We're still in a negative trend to market short term. That suggests, again, until we really kind of work through signals as well, that any rally that we get should be sold into. So if you've been under pressure in your portfolio, look to use this reflexive rally here to take profits, reposition some risk. We're about to trigger a sell signal on the NASDAQ. And again, when we look at kind of our longer term indicators, we had this rally. Markets were starting to head back up towards overbought conditions. So again, this recent correction gives you a little bit of work room here to work with on a rally. There's not a lot of room here before we run right into more important resistance. Look to use the rally as an opportunity to rebalance risk. We still have big concerns here over the next couple of months to deal with. We've got the Fed hiking rates. We've got inflationary pressures. Again, we may see those starting to ease here a bit, but the Fed is intent on tightening monetary policy, and that's going to slow the rate of growth for the stock market. I'm Real Lance Roberts for 3 Minutes on Markets and Money. See you back here tomorrow.